Welcome to Trading Lounge and the Indian report for the 18th of June. We'll cover the Nifty and Bank Nifty. So, as you know, the particular move to the upside here can be counted in two ways. We could look at it as a 1, 2, 3, 4, 5 for the A wave, ABC for the B, and then up for the C wave here to the 61.8% retracement level. And from that point, it could just drop straight down through here. So we need to put some short trades on for that. But we also need to understand that if the 10,000 becomes support, we need to be looking for long trades. Now, the bullish trade can just have this as an A and a B and a C wave down to here and then move up from that point. So we need to look at that as well. But like I said, the way to handle this situation is that any long trade would need support on the 10,000. Okay, currently we're under a level here, and all we need to do now is to look for short trades, just basically take the last low out at that point. Let's move in and take a closer look. And also look at the bullish count as well. So on the bullish count, we can view this here, the 5 waves up here, as wave 1 and back for wave 2 here. And then the next 5 waves up here as wave 1, the 61.8% retracement level. Look, that may even be in here as wave 2 at the moment, and we could actually just go straight up from here. It doesn't appear to be so because this particular move that moves up through here looks corrective, but it's only corrective unless this one here gets taken out. So we just need to be mindful of that. So this could be up for 1, back for 2, up for 1, and back for 2, and back for 2 into this space here, and then continuing to move to the upside. So we just need to be a little bit mindful, but because we are under the level now, coming and retesting that level there, that means that we need to sell any low. So the daily low you can short, but we'll try and get a better situation in here. But just wanted to point out that the bullish count can be 1 and 2 here, and then 1 and 2 here, or we can look at it with the B wave up here, and we're just going to be bearish from that point. So we just need to be open and stay flexible to take trades as we see fit. So the US count that we've got, if I've got that here, this is what we're looking for in the US, basically looking at all this is wave 1, an A and a B and a C here for that. That's possible as well, but it still gives us that move to the downside here for this, and it's quite a clear A, B and C wave up here. But as I mentioned, it would be nice for us to, or the market, to take out that low here, and then that would confirm that we're on our way in a 5 wave sequence down through this wave. We also need to be mindful too that the length of wave A here can also be the length here if it's corrective. Oops. So we could be looking at a move to 9,200, roughly where we are here. That would give equality in the wave structure if it was corrective. And we also want to see this move down on more of an angle as well here. So we'll look at the short trade, how to get into the short trades, and we'll also look at where to get into the long trades at that point. So I think I might just go to the 15-minute chart here. So yeah, if we look at this as the A wave here and the B wave here, we could also look at it as wave 1 here and wave 2 here, and so on. But all we're looking for is the trade here, and as you can see here, we've got a nice, this is 5 waves up here for wave A, and then B and C here. So it does make a nice sort of corrective move with a bit of equality between the structures here. And it looks impulsive here, corrective here. It's impulsive here for this, corrective here, and impulsive for this move down through here. It appears corrective here at this move here. So we should be like lowering down at this stage here for this. As I mentioned, we can go long above the level, but we can also bring that down and go long above that high there, because that would throw it into a bullish pattern at that particular point. So we're looking for this to, it's already retested the 9,900, might have another crack at it. I might have to go to the tick chart so we can just pull that apart. So before I move on from this though, This would be the pattern to the downside here in terms of wave 1 here, wave 2 here, then 1 and 2 and 1 and 2 here, and then dropping down quite swiftly into the third wave, fourth wave, and fifth wave, dropping lower into this space here for that. So if that's the case, then we know where we are. If that low gets breached here at that point, and this is really the first level below the important one below here, as this number here supports the market to the 10,000. So I'll just go to the tick chart and see a little bit more detail. I'll just have to get in some more data. So this is this is counted the same, but it's just 1 degree smaller, because this is a bullish count as wave 1 here, an A wave here, an A and a B and a C for the B wave here, and looking down for 5 waves here in terms of 1 and 2 here, 1 and 2 here, and we could look at this as 1 and 2 in here probably, and 3, 4, 5 here for third, fourth, fifth, C of 2 there coming down into the 9-2 area. So that's all possible and doable. We just need to see how this plays out here. We could look at this being impulsive down through here. That counts quite nicely as impulsive. This 1, 2, 3, 4, 5 counts nicely as an impulsive wave to the downside. And this one here also comes in nicely to the downside here as well. This number here is the important one, the 9,800 here. I'll just darken that up a little bit. That's the first minor level below the 10,000. So that's the critical one. Well, you can see it here anyway. So that as a resistance, and that's why taking this low out here, or the daily low, would be the trigger for going to the downside. Now, if this was wave 1 of the next degree here and wave 2 pulling back here, then we wouldn't want to see the market pull up, move up above that. So that's where we can go long at that point. You could probably even, let me just, no, we just got to be a little bit careful, because it can be 1, 2, 3, 4, 5 for 1 and then back for 2. And I'll probably look at all of, I'd have to check that out. But what we can do first off here is just grab that high here, that low here, and look at the 50-60% retracement level in here. So thinking that we could go long above this one here, but it's too close to this, so just need to be a bit mindful of that. So essentially the market wants to retest the 9.9 again by the looks of it here, but there is other levels in here that it needs to get past as well. So the levels in here are, it's got support on the midpoint, the 50, so that's important, right? So between 800 and 900, you got the Fibonacci numbers 1, 2, 3, 5, and 8. With 8, we've got group 2 there as well. So group 2 is where it is now at 872. But I'll just put in the midpoint here, the 50, and then we can come down into the 30 and 20 and 10 here. So 1, 2, and 3 make up group 1, then the midpoint, then group 2. The group 2 here is 65 and 72. I won't worry about that at the moment. We'll just, because we got those in, I'll just make this a little bit different here. So support on top of 9,900 is a positive thing for this market, and would look to go long at that point. Let me just check that out here. That looks like 1, 2, 3, 4, 5 for 1 here. So we have to use this one as 1 and 2 and 3 and 4 and 5 here, because it was the high at that point. Does that make sense over here though? 1, 2, yep, that makes sense. So that's cool. So this can be just a fourth wave pulling back up here. So, but still, 1, 2, 3, 4, 5. No, something, it's not fitting very well actually. We could look at this as 1 and 2 and 3 here, but then wave 4 comes up and overlaps wave 1, so that's a problem. But if we just took that there as a thing here, then the 38.2% retracement level is just here. I can see this is some sort of ABC, so we've got a little bit more to go here. So it'll be interesting if it fails. fails above this level here, then it's going to be, I can see this is 1 and 2 in here, and so this will be a 3rd and 4th and 5th into here. So it looks like we'll be coming up a little bit closer into this space here for that 50% retracement level here. But it also does bring in the short trade thing a little bit better as well here. So let's just muck around with this for a little bit. So now we can go short. I can't bring the thing over this side. We can go short below this level here. So in a nutshell, let's just leave it at the 950 here. If that becomes the resistance, you can put the first short trade in play at that point. So I'll just, it's a shame that it doesn't work all the way across, but there you go. We'll put it under this one here. You know what I mean? If that becomes the resistance, look, to be honest, you could probably even short it right up into this space here. So that would be group 2 here. So 65, 72, 72 and 80. So if 65 becomes the retested resistance here, 65, you can get up in there as well. There we go. So if that becomes the resistance, then you can short from that point. I'll let you handle that though. Yeah, so you can short from in there once that becomes the resistance, because then what's happening at that point is group 2 here, 65, 72 and 80 becomes the resistance. That means that the 900's rejected at that point. And that's what you're looking for. You're basically going from one number to the next number of the same degree of structure. And the bullish side, yeah, so if that becomes the support up there, then you can go long from that point. But you need good support. You need that classic trading levels pattern, which I'll talk about a lot. Okay, so that's pretty much it. Short the daily lows, and if this is taken out here, then that destroys this bearish count that I've got here for further downside, and then we need to look to the upside. So a position here, and then if the 10,000 becomes the support, then you can get a position on that side. Let's have a quick look at the Bank Nifty. So we were looking yesterday looking at this coming down here for the 5th wave, and then we're looking for a move back up. So we can short the market below this low here now because we've got an impulse wave here. You know, this may be an A wave, a B wave and a C wave here for this. Or if that's not the case, we can look at it as wave 1 and then going back to wave 2. This is not a long trade here. This is the 61.8% retracement level at 20,888 area here. So the market could, I mean, this looks corrective to me here, and has it pulled up enough? I don't know, perhaps so. If it locks under the 20,000 here, then you can short it from that point. Otherwise, you would be looking for an A wave, a B wave, come back into the 20 here, and then go up for a C wave at that point. So we couldn't really go long in this market unless this level here, the 61.8% at the 2100 here, becomes the support. So if that becomes the support, the 2100, then you can go long, and you'll need the classic trading levels pattern. You need something like this here. You just visually need to see that you're sitting on the level to the upside, and you need to see that you need to buy above new highs. That's a nice safe way of doing it, okay? So that's what you'd be looking for at that level there. And short it under the 20,000, because any move down here would just bounce off that. And if it bounces off it, then drops through, then you're on the short side. Alrighty, thanks for tuning in. Much appreciated. Cheers.